In the UK, 1 in 5 people will die from heart disease, with cholesterol being a leading cause. And yet, the latest pill approved by the FDA to reduce cholesterol is not even available in Europe, where 47% of the population suffers from high blood pressure. Will this pill be a game-changer for European money in 2025? Or just another example of a broken system? The dark reality is that pharmaceutical companies like Pfizer and AstraZeneca, with headquarters in New York and London, have a stranglehold on the European market, with 75% of all new medicines being approved in the US first, leaving Europeans to wait an average of 2 years before accessing life-saving treatments. And it's no wonder that 62% of Germans and 55% of French citizens are skeptical of the pharmaceutical industry. But what's really behind this delay? And how does it affect European investments? A case study in Switzerland reveals that the country's strong economy, with a GDP of over $700 billion, is heavily reliant on the pharmaceutical industry, with companies like Novartis and Roche generating billions in revenue each year. But with the new cholesterol pill set to disrupt the market, will Swiss investors be able to capitalize on this opportunity? Or will they be left behind? And what role will the European Central Bank play in all of this? The hidden mechanism at play here is the complex web of regulations and lobbying that governs the pharmaceutical industry in Europe, with 80% of all EU health policies being influenced by corporate interests. And it's no wonder that 70% of Canadians feel that their government is not doing enough to regulate the industry. But how do these regulations affect the average European investor? And what can they do to protect themselves? And what's the real reason behind the FDA's approval of this new pill? The psychological dimension of this issue is just as fascinating, as people are often trapped in a cycle of fear and misinformation, with 60% of Europeans believing that the pharmaceutical industry is more interested in profits than people's health. And it's no wonder that 50% of Germans and 45% of French citizens are hesitant to invest in the pharmaceutical sector. But what's the underlying reason for this mistrust? And how can it be overcome? And what's the darkest secret that the pharmaceutical industry doesn't want you to know? Wealthy people, on the other hand, think differently about this situation. They see the pharmaceutical industry as a complex system that can be navigated and exploited for profit. With 75% of high net worth individuals in Canada and Europe investing in the sector. And it's no wonder that they're able to generate returns of up to 20% per year. But what's their secret? And how can you replicate their success? To capitalize on this opportunity, there are 3 specific steps you can take. First, open a tax-advantaged account with a reputable broker like UBS or Credit Suisse. Second, invest in a diversified portfolio of pharmaceutical stocks, including companies like Novartis and Roche. And third, use a trading platform like eToro to stay ahead of the market. But what's the next big thing in the pharmaceutical sector? And how can you get ahead of the curve? If you are still watching, you already think differently from 95% of people. Most people will watch this and do nothing. You are not most people. Press like. It takes 1 second and helps more people find this truth. Subscribe. Because tomorrow I am covering something that will make today look like a warm-up. I will see you there.